So hello and good afternoon. I welcome you to today's special webinar, how to trade the market opening of the US markets. Oh, by the way, I just realized that I completely forgot something I promised last week. So hello and good afternoon. I welcome you to today's is not so cool. Let me just see. Let me just see if we can get this problem solved here, even though it probably might take a little longer. I'm really sorry. That's usually that's usually something which does not happen, let's say, that often. It's very, yeah. So one thing in the morning, something I want to probably mention here, even though it's only from a pure technical side, but it perfectly illustrates how important, while we click here through the risk disclaimer, how important it is if you trade the markets professionally, like I do. So I've mentioned this several times, that I'm managing clients' money, that I'm trading my own account, and you can follow all this, by the way, on, for example, external sources like FX Blue. So it's not just that I say I trade live, but that you can also see that I'm trading live. Therefore, before here, by the way, this strategy here I present is part of the basket, an automated strategy, which is run here on this account. So one second here. And you can see, by the way, that's also something we want to mention then here, that the market currently is not moving that much, and that's one of the reasons why the current profit here is nearly break even for today. So there are not huge swings happening. By the way, here you can see that's a very interesting thing. That's a remote connection I have to open right now to make sure that I get all the data to run this back test here, which I promised last week, and we will go through this. Nevertheless, now. First of all, let's start with something else. So it's one explanation why I forgot this, beside the fact that I just forgot it. In the evening yesterday, I ran into some trouble from a technical standpoint. So I tried to start my laptop to prepare the trading day today. So yesterday evening, usually the day before in the evening, I start to prepare my charts, not just for research, but also for my trading. And then the laptop just didn't start anymore, but it seemed to be broken. Now everything is fixed, obviously, so I'm here. Nevertheless, that's the moment when you just realize, okay, that's not really cool at all, especially if you rely on the technical side here, heavily on the technical side. So I need a laptop, I need a computer. So now you might say, well, then you have certainly a second computer as a professional trader. Yes, I have one. Nevertheless, the solution here is not the most professional one, or no professional one. It's not a very up to date computer, let's say. So it's more like a solution which is how to say that, it's like a solution just in case. So, and nevertheless, the thing was that I needn't to worry about anything, because I'm always and all the time make sure that my trading is not affected by that. So one thing very positive to note here, even though I would have had a chance with the other computer to intervene here, I didn't plan to take a position today from a discretionary perspective. So what we are looking at here is a basket of strategies, and I am part of this basket. So I'm managing this overall account, and I'm also overlooking, together with a second guy who was already once here with us. His name is Stefan Frichovsky. He's a PhD in physics, and he developed several purely automated trading strategies, which are also traded here on this account. And as you can see here, while my main asset I trade is the DAX, which is accounting here for over 40% of the trades, there are plenty of other assets, as you can see, which are mainly currency based, but also sometimes we have positions here in gold. And the thing about this is that these automated strategies, they run all the time. And how can you achieve this? Well, you achieve this via an VPS. So again, I would have had the chance to intervene from a discretionary standpoint, respectively, to set up my own trade. Nevertheless, I didn't need to worry here about my technical issues because I'm using a VPS, so I'm prepared just in case. It's not just that the hardware does not work anymore, but it's also that, for example, your internet connection is lost. So we are talking about, in fact, trivial things. It's not a big deal, but it perfectly, this development yesterday evening and also here in the morning at my end perfectly illustrated how important it is to also think about such trivial things. And therefore, based on this experience here at my end, and since it showed how important it is to be prepared here, I just want to give you an idea of how you can overcome this, especially if you're trading purely automated, but also if you're trading discretionary, let's say, and have nevertheless a system which generates your buy and sell signals automatically, and then you trade from a discretionary standpoint in terms of managing your stop, for example, from a discretionary standpoint on whatever time frame suits your personality and all this. So what is what I'm talking about here is something you can find on the website from JFD Brokers, jfdbrokers.com, and then /English here, /en/, and then you go to trading and technology. And if you scroll down a little, then you can see here that obviously JFD is taking this topic very, very seriously. Trade at the speed of light with JFD state-of-the-art technology. And when it comes to trading, time is money. Yes, and not just that, but being connected to the markets is very important. And if you scroll down a little, you come over something which is called VPS, Virtual Private Server. So this is nothing more than a computer which is run outside of your computer, if you want. It's just an online computer. Sounds weird, but this is exactly how you can understand this. It's a virtual private server, and there are two contributors here. One is FTSE, the other is MT8, it's my trade host. Depending on what trading style you have and how many EAs you're running, for example, or respectively, how resource consuming your trading is, it depends on which solution suits best for you. But what it's definitely important is, and something to note, if you have such a virtual private solution, again, you don't need to worry if your computer shuts down or the internet connection breaks down, because you are still connected to the markets with, well, thanks to such a VPS solution. So again, to several, it might seem a little too much now. They might say, well, is it really necessary to discuss VPSs here? Let's jump into the price action and then trade the market opening of US markets, something we will do. But I think this is even more important, especially from a long-term perspective. And based on my experience now, and since I'm really thankful to have such a solution here, it's definitely worth to give it a deeper look. By the way, also something very interesting to note here in this context is that if you're trading with JFD Brokers, for example, for FTSE, you're getting, as a live client, a 50% discount. If using this solution, respectively, you get a 10% off or discount per month on any MTH dedicated server if you use a certain promo code. So if you're interested in such a solution, or if you say, well, that was something I was thinking about for quite a while and I didn't really know how to get over it and how to solve this problem before it really becomes a problem. So it's purely theoretical right now, but nevertheless, it could be, I could be in trouble tomorrow for whatever reason, internet connection is lost, whatever, then probably such a VPS solution is perfect for you. You can easily connect here with such a remote connection. In my case, in fact, here I can't switch it over. By the way, I can't change the screen here for whatever reason, but I can tell you that this is showing that the VPS now is running. And what I want to do is the following. 1 second, please. I want to get the history here already. And by the way, let me just see. Again, it takes really some time, unfortunately. Nevertheless, let me just see if I can get a solution here, since I really want to show you the results of this strategy. Oh, that didn't work. Why? That's not working that way. Okay, that's not so cool. Then let me just do it that way. Yes, and now I want to open here document. You will see this is the problem. That's why it probably takes a little longer. Problem is that I'm not running only one strategy on this account, but a second one. And this is the problem, because that's what takes a little longer here at my end. So I'm not just opening an Excel file here. I just copy pasted the overall result, as you can see here. And now the thing is that we have to see how to use the balance, the initial balance. We started out obviously at oh, is it only? No, that's not right. What happened here? 1 second, please. Let me just see. I want to start 2017, the 1st of July. Okay, again. Huh. Okay. Well, now we have a third reason why this is a problem, obviously. I didn't know that. For whatever reason, obviously, here, the starting point of this history is showing a mistake. It's deleting all the history from the start of this, let's call it the project here, till the beginning of 2018. This is, in fact, I mean, this is a demo account. I'm running this here. So, in fact, something I probably want to give you an idea on how I manage my trade. So why is that a demo account? It's 2 strategies running here. And in this case, the second strategy here, or the first strategy, in fact, is the strategy I'm running. It's an automated strategy. You could easily trade it automatically, and you'll get a positive result. So it has a positive expected value. My target now as a professional trader is to use this already profitable trading strategy and to make sure that I try to optimize this expected value. So give you an example. 1 second. I'm just opening the editor here. So to give you an idea about this, so it's like you have an expected value, which can be calculated in a very easy way. It's the average winning trade multiplied with the hit rate, and then you subtract the average losing trade multiplied with the loss rate, and the overall result should be bigger 0. That means your trading is profitable. So in fact, if someone is telling you, hey, I'm profitable trading, that means he's trading with a positive expected value. Very interesting to notice that there are not that many people out there who really know what profitability in trading means. They come out with like, hey, I made money on my last trade, so I'm profitable in trading. That's far from the truth, because that has nothing to do with being profitable in your trading, but it comes down to the overall sum of all trades, which shows whether a trading approach is profitable or not. We don't want to go into much detail here, but this is something very, very important to understand and noteworthy, that you can calculate whether someone is profitable or not. And it's not coming down to 110 or 100 trades, but in fact, it should be probably an even higher sum of trades based on those parameters: average winning trade, average losing trade, and the hit rate, respectively the loss rate. You can then calculate whether this trading is profitable or not. If this overall result is negative, then you're obviously losing with your money and with your trading money, because the expected value is negative, and that means that on average you're losing whatever amount. So now let's shorten things up here. Expected value is EV, and let's assume that the expected value of this strategy I'm showing you is 10 cents, let's say. So 10 cents, what does it mean? It means that you make on average 10 cents per, in my case, euro, but you can also use US dollar, Japanese yen, whatever, per euro you risk. That means nothing more than if I risk, for example, if I risk 1,000 euros, that means with an expected value of 10 cents, I'm making on average 100 euro per trade. Now you might say, what? You're risking 1,000 to make 100 euros? Isn't that that bad? Well, don't get me wrong. It's the expected value. So we are not talking about the payoff ratio here. So the average winning trade, respectively, the average losing trades. That's not what we're talking about here, but we're talking about the expected value of this strategy. Meaning, if you, for example, have a hit rate of 50%, it's a coin flip. That's meaning you can win in 50% of the cases, you can lose in 50% of the cases. Thing is that if you have such an expected value of 10 cents here, that means nothing more than on average, it doesn't matter whether it's head or tails, because you make on every flip 10 cents based on the advantage you just worked out. For example, in case of a coin toss, it's 50-50 all the time, but you have an attractive payoff ratio. What means that you're having an average winning trade, which is bigger than the average losing trade. And that way you start to generate a positive expected value. So that does not have something to do with each other here. If I say you're risking 1,000 euros and you're making on average 100, with the fact that you're only aiming on 100 euros while skipping or trying to avoid losing trades. In fact, you don't know whether the next coin flip / trade will be a winning trade or a losing trade, but it really doesn't matter to you, because you know, thanks to your overall payoff ratio, for example, you have a positive expected value, so you're making money in the long run. Probably you will lose the first 10 coin tosses. Respectively, you will probably lose the first 10 trades. It doesn't matter, because you're trading with a positive expected value. So now probably some might say, well, is that really necessary now? Coin tosses, don't we talk about trading? Let's use an example here. We started with this project, well, respectively, I started with this project already several days ago, as you can see here, nearly 2 years. I'm running this project, but as you can see here, for example, in this live account, there was a sudden jump. This is the account balance here. There was a jump in the midst of February, and that was based on the fact that that was the day when JFD brokers asked whether I'm interested in managing this overall project, which is called JFD Basket, and be part of this basket and be the manager of this overall account, which is traded here. And this is in fact because I just said yes, why not? So what we can do is we now not only have one strategy, but 8, 9 strategies. And here on FX Blue, what you can do is, for example, you can break it down by days and have the overall result of the last trading days. And in fact, that was, if I'm not mistaken here, that was the day, the 19th of February, once we started this project. So in fact, we're not talking about 1 month, but you can already see, and that's something I'll do then a little later on here with the month, that you can say, you know what, the overall result is already showing a positive outcome based on the positive expected value we're trading with. By the way, something we'll calculate here with real numbers. So what you nevertheless can see is that the first 5 trading days, this one, and this one here, were, let's say, not that positive. Then we finally found a day on which we had a small gain, at least, only followed by the next loser. So after 8 days, we had 7 losing days and only 1 winning day. And that wasn't nice at all. I can definitely tell you that, especially because all in all, you can here just sum up these numbers. That was my overall result, and I was ahead something like 1.5% or something, and just seeing diminishing our profit here. The in fact, max drawdown out of the last 4 weeks is in fact nearly 1%, which resulted here out of this losing streak, in fact. So that amounts to 0.97%, in fact. And then things turned. And as you can see here, that was a small gain on the 28th. And then the 1st of March, the 2nd of March, and also and especially here the 7th of March, for example, we were not only capable of making up all these losses, but to turn out a profit, and right now are very profitable for the trading day. Again, we are not talking about statistical significance or something like that. The only reason I'm showing you this is because it perfectly shows that if you know what you're doing, and if you know that the strategies you're trading are profitable over a very long time span, you run several back tests, you've tested it under several market conditions, and the overall outcome is positive, you build trust in those strategies, and based on that, you just keep on trading them, because you know probably days are not that, or current market conditions are not that perfect for my trading approach, which they weren't, in fact. But nevertheless, now things turn again, and we start to make a profit and to gain again. And this is exactly what this perfectly illustrates already after 1 month here. So for example, let's have a look here at the current result for the month. So as you can see here, that's, by the way, a small minus resulting out of the fact that you saw this sudden jump in the account balance, and I was trading a smaller account on which I turned a profit for the month. But then the bigger account resulted in an overall bigger absolute amount here, which was lost, even though from a percentage perspective, I didn't lose, but in fact turned out a profitable month here too. And now you can see for this month, for example, the current performance here is 1.6%. In fact, if you want to have an overview here, oh, I'm sorry, that wasn't it. So if you click here on statement, you can also see the monthly return table, for example, there. And there you can see that we already show a quite very solid result for the month of March in general, but also for the strategies itself. And what this perfectly illustrates, right now we are only talking about numbers. Trading seems to be a numbers game. And in fact, this was something I prepared, at least in my mind. What I wanted to show to you today, based on the question last week, it was, what about the strategy you just plan to show to us here? Something, by the way, we'll also formulate a trading setup based on in the upcoming minutes here. Respectively, in fact, it will be really difficult because we have to wait another 15 minutes once our webinar here ends. So in fact, right now it's 1:30 to 2:15 p.m. GMT. This is due to summertime, the switch, and the US right now starting in already 7 minutes here. And it really started the same here. The project with this trading setups we're presenting, this project started the same way. We had, in fact, 4, 5 occasions or something like that every Thursday, even though the strategy can be traded and is traded, by the way, every day, depending on volatility and if the setup is triggered. But nevertheless, it's an intraday strategy, which is usually traded every day. But every Thursday, we ran this here, the 4 or 5 times, something like that. Every time I formulated the setup, we had a losing trade. And I bet there were several guys out there just listening to me right here and just losing the patience here and just saying, you know what, this guy does not know what he's talking about. I just skip it, because all the trades he's presenting here are all losers. In fact, what I can say today is, by the way, that's nevertheless something I can do. I just hope that I can do that, by the way. 1 second. Let me just see. No, that doesn't work. Let me just see whether I probably can, at least for this year, right from the start of the year, since there's also some numbers missing, obviously, for nearly half a year. Let me just see. Yes, that's not bad. So even though, by the way, that's the next thing. Let me just see. 1 second. I just take a screenshot here, so to show you the overall details of this current project here. So that's the way it looks like right now. And as you can see here, right now, obviously, probably that was here. It's not even looking that brutal because the strategy is traded over and over and over again. But these two strategies are run in this account here. So it's not only this strategy I'm presenting to you here, but nevertheless, you can see that it already turns a profitable result. We have 94 trades. That's only for this year, by the way. So we're only trading from the 1st of January here, because much of the account history is just missing based on the fact that yeah, for whatever reason they just cut out the overall result. And as you can see here, also the profitable trades are only nearly 49%, while 51% here are losing trades. So nevertheless, the fact that we are turning a significant bigger average gain to an average loss, and the so-called payoff ratio. So it's 105 nearly to 59. If you calculate this, you will find out that the overall result here, so 1 second, 105 through 59. Oh no, that's not good. 105 through 59. So it's 1.78 in fact. So, and here we again with the expected value. So you can put in these numbers in this formula here, and then you'll find out that the overall result is positive thanks to the average gain being bigger than the average loss. It's all coming down to this. So this strategy itself, it looks really yeah, it looks some kind of rough, trivial. If you just look at these three parameters here, really, I think there are plenty of guys out there just looking at this and thinking this can't be profitable. But in fact, it is. First of all, for the first 3 months this year. Now you might say, okay, there's a physician out there or a mathematician who will say 3 months. What's 3 months? What's 94 trades? This is nothing from a statistical perspective. Yes, 100% correct. Nevertheless, I can show you that the strategy here, for example, is profitable. This is only the open range breakout, which is one strategy of these two which are presented here. So first of all, this strategy is profitable to minimum at least November 2010. The other strategy for the DAX is profitable back to 1999. So just to have an idea of how big the time frame is we're looking at here. And it's like we can't say whether it's still profitable the next year, the next day, whatever. But the thing is, as we say in trading, the trend is your friend. It's not just only that the market tends to move in direction of the momentum it has taken on, but it also, in terms of strategies and their profitability, usually stays the same. The strategies stay profitable. Nevertheless, there will be times when it doesn't work well, while there will be times when it works outstandingly well. And it's the same like in every other business, for example. Like, for example, if you're selling ice cream, I mean, you will easily sell ice cream in the summer, hot summer, at a beach. You will make tons of money if you run the right approach here. Nevertheless, try the same around Christmas and when it's snowing. I mean, the idea of selling ice cream at a beach once there's sun out there, probably there's also in December around Christmas, some day where the sun will shine. Nevertheless, you won't make a dime. That's just based on the fact that it's not hot, you know. Nevertheless, if you make enough money during summer months and can or have a solid financial fundament your business is built on, usually you can live out of this money, the huge amount of money you made over summer. You can live from this money also in winter, and then start to make money over again in summer again. So it's like, it's the season, okay? It's a seasonal business, if you want. It's the same is true for trading. So now let's come back to the calculation at first here. So we said 49% of the cases, you multiply this with a gain of 105, and then you subtract, so this is the overall amount of euros you're making here, and then you subtract 51% multiplied with 59. So what do we get? It's 105 multiplied with 0.49. 45 minus 51 multiplied with 59. Oh, sorry. once again, 59 multiplied with this. Yeah, it's 30.09. So obviously the overall result, I'm not calculating it right now, is positive. So you're making money on each trade, on average 20 euros per trade, which means if you're risking at a 10,000 euro account 1%, which is 100 euros, you're making on average nearly 20 euros or 20%. So what you can see is that based on these statistics here, obviously this overall trading result is positive. So now you can do the same thing. This is a forward test if you want. You can also run a back test and test your idea in the past. The only problem to back test, for example, or not the only problem, but one of the problems you could run into is that there are several approaches out there and also guys who probably will do some kind of curve fitting, optimize the strategy based on historical data and the movements here. And this is something which is causing lots of problems because you can't really rely on the fact that the future will look like the past did. So it's more like a rhyme or a poem, let's say. So probably this is, by the way, the same technical analysis is based on. So certain patterns probably occur over and over again and result in certain market movements, like head shoulder formation, for example, showing that the trend is probably coming to an end, that the market is about to drop, or an inverse head shoulder, for example, showing that the market probably starts to bottom out and then starts off from there, whatever. Nevertheless, the overall market conditions will never be the same. And that's then resulting in the fact that it only shows some tendency to be like the past. Nevertheless, it won't be like the past. That's, by the way, also one of the reasons why, for example, this approach here I'm presenting to you is so strong, because you can't really manipulate it. I mean, you have only, let's say, what is it? Yeah, in fact, it's two parameters. It's nothing more. You have here the opening range, and you have the exponential moving average 10. So the opening range saying I'm going long if the market breaks out on the upside, and I'm going short if it goes down on the breaks out on the downside. After we have such an open range defined here, and then we decide to put a filter in this approach saying we are only going long if we trade above the exponential moving average 10 on a 50-minute time frame, and we're going short once we're trading below that. And that's it. You can't really manipulate it. Well, the only thing you can certainly do is, for example, not use an exponential moving average 10, but use an exponential moving average 12 or so. Nevertheless, and this is also then showing that the approach is robust, and there's some it's not just robust, but it's a solid approach. It's difficult to manipulate it. The approach should be profitable for an exponential moving average 12 too. The same is true for an exponential moving average 8, for example. If you're dramatically changing the exponential moving average, like switching it to, let's say, 50 or so, I mean, we somehow start to talk about a completely different approach, since the exponential moving average means you're changing it by a multiplier of 5, for example. Nevertheless, in the neighborhood of 10, like 8 and 12, let's say, which is, by the way, also quite significant. I mean, we're talking about, if you switch the exponential moving average from 10 to 12, we're talking about a change of 20%, which is, from a statistical standpoint, something worth mentioning, let's say. Nevertheless, the thing is, again, coming back to the curve fitting topic, it's not really possible from such a rough trading approach to really manipulate it and to optimize the past here. And so based on that, let's have a look at the stats here, which I promise, once again, here, let me show you a chart. So this is the result for the back test, for example, of this strategy I'm just presenting to you here. It's perfectly showing that we have a clear uptrend in this equity curve. So obviously this approach is making money, believe it or not. I mean, some will say, well, I've seen charts at in films or in documentations, or a friend of mine who said he is an investment banker, a trader at an investment bank, showed me some charts with lots of indicators in it. Well, and you can't really imagine that such an approach can be profitable, since it's really rough. But the great thing about it is it is profitable. And even if you believe it or not, you can't rule out, or you can't really say that it's not profitable when looking at these stats, when looking at a result after over 1,300 trades here. And that was, by the way, ending in July 2017. So there's easily a chance to now say, put it on top of that, you obviously broke out on the upside, since this is something we've now seen in our forward test here, even though it's two strategies. But what you can clearly see is that this approach kept on being profitable. And from time to time, had to face or not to face, but to overcome drawdowns, which resulted out of the other approach for the DAX strategy in this case. So the strategy keeps on being profitable. That does not mean that it will stay the same in the future, but there's a clear tendency. And by the way, what you can also see is already, for example, when looking at the win rate here over this time frame of 7 years, you can see that the win rate was only 47%. And as you can see here, the hit rate now is 49%. Again, it's very difficult to really say that, because the thing is that there's another strategy within this. But you can see that the result we have now seen here for the last 3 months is comparable to the result we have seen here for the last 7 years. On top of that, there's also the fact that if you look here at the average profit and the average loss, you can see that this result is usually 1.3, around 1.31 to 1. In fact, this is more conservative, still profitable nevertheless, as this result, which is bringing us to something like 1.7, 1.8 here. So meaning overall, the strategy currently finds itself in a very, very favorable and a very good market environment, but this will change. Most likely over probably the next months, probably over the next year. Right now, the only feedback this approach is giving you when looking at these numbers and when looking at the backtest you run here, and where we have very, very detailed data, is what you can see and what you can clearly understand is, okay, currently the performance is really well. It's really good. And this is probably one good reason to say, okay, right now, probably it makes sense to probably increase the risk a little, going from 1% to, let's say, 1.3 to 1.5%, something like that, which is already quite significant. But an approach which professional traders really use in their trading. Let's come back here. Let's come back here to this real example with this strategy, with this basket. So it's not that I'm the manager and I decide everything on my own, but in fact, we have a committee here discussing this approach every week. So sure, I'm part of this committee since I'm the trader of this basket. Nevertheless, we also have Stefan, for example, in this committee, sitting there giving an update on the algorithms. How are his strategies, which are completely and 100% automated, how are they performing? He runs some research on that. We have portfolio management at JFD Brokers, consisting of 2 guys, in fact, and giving some update on how the risk parameters behaved, especially under, let's say, more volatile market conditions. And based on that, we sit together and we discuss how to weigh certain strategies. So one strategy is performing well, probably outweigh it a little. Then reducing the risk of another strategy, which is not currently performing really well. And that way, try to not just stabilize the overall equity curve, but also make sure that we optimize the overall yield our investors then can expect here. So we will manage this project from a very, very professional standpoint. And in a way, you expect the hedge fund to manage its portfolio to make sure that the investor gets the most optimal outcome of an investment here, if you want. So, and this is in fact what professional trading looks like. If looking at all these components, probably one or the other viewer will now say, well, I only wanted to trade, right? I only wanted to go long, I only wanted to go short, and it's not that difficult. In fact, trading is not just at first glance very easy. Nevertheless, if you read between the lines, a very difficult thing to master from a pure technical standpoint, but it's also from a mental perspective. It's a very, very difficult approach, and you have to put in lots of work and lots of hours of analyzing your approaches and really knowing what you're doing to easily overcome such a period here again, where you start out with a project and you see the first 7 days out of 8 showing a loss here. So that's again what I've already shown you. If you start out with such a project, and if you really do not know what you're doing, the first thing you would do is I just stop this project here, and you will never ever overcome this period. Probably change strategies. So that's something many people out there do. So it's not that people out there do not understand what trading is about. There are some fantastic analysts out there, some people who really have a deep understanding and really grasp the concept of risk and money management, are very disciplined. Nevertheless, they never make it to the profitable traders because sometimes they just do not know what they are trading here and what they are looking for. And that's the reason why they fail, because they just lose trust in the approach, use another approach, then try the same, fail again, do that again, and over the long run, even if they have a solid risk and money management plan, nevertheless lose with their trading and lose money. And rather sooner or later, probably just completely stop trading, because they just say, well, obviously you can't make money I'm trading the markets. It's possible. Nevertheless, it takes discipline. It takes stamina. And it obviously takes a very deep understanding of risk and money management, but also trading psychology, for example, but also knowing that you're trading with an advantageous trading strategy. Okay, so that was it on the theory. I just hope that I was able to overcome the fact that I promised to show some real statistics here on the account. Unfortunately, again, I had some trouble with my PC. That was the first problem. Second was something, I want to be honest with you, I just forgot it. And the third one is, unfortunately, now after getting this data, I just found out that that we only have data back to January. Nevertheless, I hope that what I just presented to you makes sense and adds some value and gives some good overview of what professional trading is about, and also how this strategy I present to you here, how the strategy keeps on performing even after a solid back test, now in a forward test. And by the way, this strategy also is part of this basket we're trading here. So it's purely automated. It's easy to automate. In fact, look at those three components. You can easily automate it and then keep on trading it. And yeah, if you take care of the risk parameters, obviously, what you can expect is the market rather sooner than later turn out a profit after commissions, after swaps, even though swaps do not play a role here because it's an intraday trading approach, and positions which are opened at, in this case here, once we break out of this open range, which is defined between 2:30, 3:15 p.m. GMT, currently 1:30 to 2:15 p.m. GMT. These positions which are taken here are automatically closed at, right now, at, 1 second, 7:50 p.m. GMT. Usually it's 8:50 p.m. So 10 minutes before the market closes here. Wall Street closes in this case. So now, this is pure theoretical. Let's have a look here at the market opening. What the market is delivering right now. So first of all, one idea of why didn't I trade today, and currently I'm really happy that I decided not to trade today. Tomorrow we have triple witching. 1 second, please. So we have triple witching here in Germany, and that's also a big expiration. It's also in the S&P, if I'm not mistaken. So the thing about this is that usually you see bigger moves to happen here, and market participants pushing the market in one or the other direction. You see some moves which at first glance do not make any sense. And what we've seen already here on Tuesday was a sharp drop on the downside. So one thing is that right at the beginning of this week, I already started to say, well, I really doubt that we can make it significantly above 12,500 points, because there are several market participants out there which do not want to see the DAX trading above 12,500, respectively 12,600 points on Friday, 12 p.m. GMT. Yes, 12 p.m. GMT. Yes, that's right. Because there was a so-called quite high open interest of written calls at this level. Same is true nevertheless on the downside, even though the open interest there wasn't that huge. And then with the with Donald Trump firing Rex Tillerson as the Secretary of State in the US, well, the market started to drop. And once it pushed below 12,400 points, there was kind of a domino effect and kind of a stop fishing move, because those market participants who wanted to see the market trading above, let's say, 12,400 points, but also 12,300 points, for example, they got caught on the wrong foot. And they had to hedge their exposure, and they do this by selling the DAX in this case. And then the market just dropped here. Something which happened several times before the big expiration, and I've seen this several times, in fact. So there are four of these events happening each year. So in March, June, September, and December. And if such a big moves happen here, such a big move happens, then it's usually the case that after a strong trending day, right before the expiration, in the days before this big expiration, that we're then done on the downside, and that usually we try to drift back and make back most of these losses we've seen here. And in fact, that's exactly what happened here yesterday, respectively also here in the morning. Now the market has some trouble to make it significantly back above 12,300 points. Nevertheless, chances to get to see strong trending moves. In this case, today, for example, I would have traded the short side, meaning that the market really starts to drop sharply from here. They are not that high, these chances, let's say. So it's not that I say it's completely impossible that we see a strong trending move, in this case on the downside. Nevertheless, chances diminish, let's say. And that's one of the reasons why I didn't want to take a short trade here. And if you look at the current price action, I'm not that mistaken. Sure, it can change over the next hours of trading and with the US markets opening, but the current price action perfectly illustrates, or is exactly what I expected to happen. And that's one of the reasons why I'm happy right now, not being positioned here. Now, let's have a look at the US equity markets, and let's have a look at the S&P. Coming in weak into the trading day, even though we're not yet done with the open range. So we are still far away from calling a clear direction for the day, because we are still within the definition of our open range here. And in the first 45 minutes of trading, usually you see the market moving in one or the other direction, even though market moves are usually purely erratic here, meaning that you really shouldn't say, oh, wow, currently it seems as if the market will continue falling here and the bears are in charge and have some big potential. Yes, it's a first tendency. Nevertheless, should be really careful and still wait for another 20 to 25 minutes. And then what we will do is we will formulate our trading or open range. And then based on that and based on our trading in relation here to this yellow line, which is the exponential moving average 10, we're here currently looking at the 50-minute time frame. Then we start, okay, if we're trading above that, we're going long. If we trade below that, we're going short. That's it. Let's use an example from yesterday. So again, we have to wait for the first 35 minutes of trading. And so here, this is the high. It's yesterday was, in fact, this red line. This is the daily high. And so I'm now making this pink line probably. Let's make it a little bold. So here, this is the high. And then we look at the low. Where's the low of this candle? It's this one here. So this is after 45 minutes of trading. This is where we see the low. Then the market, the next candle opens here. We're triggering short. And then the market starts to immediately move against us, even though we're not triggered short or we're not stopped out, because our stop is positioned here. So why are we going short? Well, we are trading obviously below this yellow line. So let's look at these rules again. So we wait for this open range to be defined, 230 to 315, respectively, yesterday 130 to 215, based on summertime. We are trading below the exponential moving average 10, meaning we're trading the short side. If we break out of this range on the downside, this is exactly what's happening here in this moment and during this candle. So the candle opens, the market pushes to new lows. This is where we are triggered. And here is where our stop is placed, because as you can see in point 3, trade the breakout of the range in direction of the identified advantage. So below exponential moving average 10, we're trading the short side. We're breaking on the downside. We are short. And then we place the stop above the high of the range, which is here. And then the market, in fact, after some time, starts to trend in our direction. And we take out the trade here at at 7:50 p.m. GMT, somewhere here. So yesterday, in fact, the trade turned a profit, something like 10 points or so again. Again, positive, yes. So again, no surprise, since the strategy itself is performing quite well right now. Nevertheless, last week I said, well, let's have a look here at what happened with the example I presented last week on Thursday. So let's have a look. Last week was the 8th. So we have to, whoop. So here's the 8th. And let's have an example. Let's have a look here at what happened. So that was the 7th. That was the 8th here. So what do we do? Well, we have to look at the high and the low between 2:30 and 3:15 p.m. GMT. So here's obviously the high of this range. That's the high there in this candle. And here should be the low, right? Yes, this is the low. So as you can see, it's not a strong trending market at all. And in fact, the trade turned out to be a loser, because we were triggered short here with this candle trading below this yellow line. As you can see here, we're trading below that. We're triggering the short side. The market moves against. Oh, by the way, probably no. We are stopped out here. So the market starts to move against us, and as you can see here, is stopping us out here. So last week it was obviously a losing trade. And so this is exactly what we're doing today. So now let's move these lines back towards today. Whoop. Whoop. So let's have a look here at today. So now, currently, this is the low. The high, let's have a look at this candle, is 756.25. Oh, that's not good. 756. Really? Wow. Yes. Oh. Yeah. So that's where we start. So we sold off right from the start of the trading day here. So this is the current high. Nevertheless, we still have to wait another 20 minutes. Where's the high and where's the low? If the market now keeps on trading within those two lines we've already drawn here, well, then this is our range. And then we say, if we start to trade back above this yellow line, we're going long. If we keep on trading, and currently we do, trade below this yellow line, we're going short. If the market breaks below, respectively above this high of this range, which was defined then here, and where we still have to wait another 20 minutes. And that's it, in fact. So nothing more to add. And this is the great thing about this. So it's not just that I'm managing clients' money and I'm doing research, but I'm also from time to time taking students which are interested in learning how to trade the markets. And the thing is that it's not unusual if I sit together with them then that they are completely excited very nervous and really like yeah, in and out, and really enthusiastic, let's say, about what will happen next. In fact, I'm completely relaxed because I have a clear preset rules. I have preset rules here. I follow them. I define the open range. I identify my advantage, and then I trade the breakout of this range, and that's it. And I move on to the next trade. I have a stop, which I place above, respectively below the high low of the range. This is my risk. I have a point value, which is then, if I multiply it with the overall risk I'm having here from a point perspective, I make sure that the position size is attached to my overall account, which I'm trading. If I'm saying I'm risking, let's say, 1% of my overall equity, I'm trading a 10,000 euro account. Well, I'm risking 100 euros. 100 euros. If you define or divide this by the trading range you just defined, let's say it's 10 points. Well, obviously you can risk 10 euro per point because you're willing to risk 10 euros. 10 euro per point is something where you then can say, okay, I'm allowed to, let's say, trade 10 contracts, probably slightly more than that, based on the fact that the S&P, for example, is traded in US dollar. That's it. And then you just move on. You have probably not just one strategy you're trading, but let's say 3 strategies. You keep on managing already running trades. Keep on managing them respectively. You keep on looking for other trading opportunities based on your strategies, and that's it. And then you just move on. And in fact, what you can see, and this is something probably most of the people don't want to hear, is trading is boring. It's in fact, if you're trading professionally, you have a preset, you have rules you just follow. They are preset, and you just have a plan you follow. It's also something which is completely different to many retail traders out there who are, again, very, very excited when sitting in front of a screen, because the only reason they are excited is because they just don't know what they are doing. It sounds very blunt, it sounds very rough and very, very hard, but this is in fact the truth. Someone who knows what he's doing, and if someone really can trust what he's doing, day in and day out, things over time are turning boring. They really turn out to be really, really boring because they just repeat this routine over and over again. And trading is just a business as everything else too. It's probably exciting to work out a strategy, to formulate an idea, to test the idea. This is exciting. But the moment you realize, okay, yes, it's profitable, I keep on trading it, and you do this over and over again, every day in, day out, then things start to get really boring because it doesn't change anymore. The only thing you probably change is certain parameters if you find out you can optimize it to some extent, even though the strategy and the strategy which is robust is not it's not really truly changed, but you probably only change this parameter from 10 to 11, since you find out the exponential moving average 11 is getting you a more solid and smoother equity growth with more attractive drawdowns attached to it. But all in all, again, the thing is that things do not change that dramatically anymore. It's really boring, and so that's one of the reasons, for example, why the only thing right now I can do, for example, is wait for the setup to play out. I need the open range. If it's defined, I just formulate my trading setup. I use my order execution tool. In this case, it's the MetaTrader 4. I just use it. I say, okay, buy the break out of this range. If we are breaking above that, respectively, sell the break out of this range. Done. Let's go for the next setup. And that's it from my end. Today, this is it from my end. Let's just see whether it plays out or not today. Still, we have to wait for this range to develop here, to be defined. if it's defined. This rule of set of rules here will just tell us if we go long or short, and then we move on to the next trade. Let's just see whether it works out or not. Last week it didn't work out. This week probably works out. Hopefully it will. Nevertheless, as you have seen here, the overall result perfectly indicates that it's a where is it? Where's my mouse? Here's the mouse. So here, as you can see, the profitable trades is nearly 50%. So it's more like a coin flip. And the performance generated thanks to the fact that average gains are bigger than the average losses. In case it's currently that the average gain is 1.77, 1.78 times bigger than the average loss. And that's generating the positive performance then over time. And yeah, if you have any questions, please feel free to shoot me an email here. Not just in terms of this overall approach here, but probably also because you're interested in more stats around this strategy here, respectively the basket we are trading, and where this strategy is also part of. If you want to have further information on that, please again feel free to send an email. And I can easily forward you here the link so that you get a better overview of those statistics attached to the strategy and the basket of strategies here. And that's it from mine. Happy trading. Watch your stops. Talk to you again next week, Thursday, again at 1 p.m. GMT. And yeah, that's it from mine. So have a nice day. See you. Take care. And bye-bye.